Did you know one of the very first real-world Bitcoin transactions was for 2 pizzas? Back on May 22, 2010, programmer Laszlo Hanyecz paid 10,000 Bitcoin for 2 Papa John's pizzas. At the time, they were worth about $41. Today, on Sept 4, 2025, that same Bitcoin would be worth an absolutely staggering sum, likely hundreds of millions, depending on the day's volatile market price. This single transaction encapsulates Bitcoin's unpredictable journey from a niche experiment to a globally recognized financial asset. It's a powerful reminder of how far the technology has come and the life-changing potential for early adopters. This isn't just trivia, it's a lesson about value and perception. Before we dive deeper into the current state of Bitcoin, I want to extend a personal invitation. Understanding the world of cryptocurrency can feel like learning a new language, and navigating it alone can be a challenge. That's why I've built a community of like-minded individuals who are all on this journey together, learning and growing their financial knowledge. By subscribing to our newsletter, you're not just getting updates, you're joining a network dedicated to making smart, informed financial decisions. We break down complex topics into simple, actionable insights so you can feel confident in your understanding of assets like Bitcoin and the broader market. As a special thank you for joining us today, every new subscriber will receive a complimentary copy of our exclusive guide, The 5 Pillars of Crypto Investing. This guide is designed specifically for those who are either new to the space or looking to solidify their foundational knowledge. It cuts through the noise and provides a clear, step-by-step framework for approaching digital assets. Risk management, how to research a project, the importance of long-term strategy, security best practices, how to understand market cycles. It's the perfect starting point to build your confidence and avoid common beginner mistakes. So, take a moment to subscribe. It's completely free, and the value you'll receive from our exclusive guide and ongoing insights will be an invaluable asset on your investment journey. As of today, September 4, 2025, the price of Bitcoin is hovering around the $92,500 mark. This represents a period of relative stability after a volatile second quarter that saw significant price swings. The market seems to be in a consolidation phase where buyers and sellers are finding a new equilibrium. This price level is a critical psychological and technical benchmark. For many analysts, holding support above the $90,000 level is a bullish signal, suggesting that the asset has built a strong foundation for its next potential move upwards. However, it's also a point of caution, as a break below this level could indicate a short-term, bearish trend. Looking at the recent price action, we can observe that trading volumes have been moderate. This suggests that, while there is steady interest, the market is not currently driven by the kind of frenzied speculative buying that characterized previous bull runs. Instead, we are seeing more methodical participation from retail and institutional players. This maturation of the market is a healthy sign. It indicates that Bitcoin is being treated less like a lottery ticket and more like a legitimate long-term asset class. The current price reflects a complex interplay of macroeconomic factors, regulatory news, and ongoing technological developments within the Bitcoin network itself. When we turn our attention to the future, expert predictions for Bitcoin's price trajectory are as varied as ever, but a consensus of cautious optimism is emerging for the long term. Many prominent financial analysts and institutions are pointing towards a 6-figure valuation as the next major milestone. For instance, analysts from major investment banks have revised their year-end 2025 targets, many now forecasting a range between $120,000 and $150,000. These predictions are largely based on models that factor in the increasing scarcity post-halving, combined with an expected surge in demand from the wealth management sector, as more advisors become comfortable allocating a small portion of client portfolios to Bitcoin. One of the most widely cited models is the stock-to-flow, or S2F model, which quantifies scarcity and has historically tracked Bitcoin's price trajectory with surprising accuracy. While not without its critics, the model continues to suggest a significant price appreciation over the next 1 to 2 years. Following the logic of the model, the reduced new supply of Bitcoin entering the market after each halving event creates a supply shock that, when met with steady or increasing demand, must lead to a higher price. Many experts who subscribe to this view believe that the current consolidation phase is simply the calm before the storm. The regulatory landscape for Bitcoin and the broader cryptocurrency market remains one of the most critical factors influencing its price and adoption. As of September 2025, we are in a period of intense focus and development on this front. In the United States, the Securities and Exchange Commission, the Commodity Futures Trading Commission are continuing to work towards a clearer framework. Recent news indicates that bipartisan legislation is slowly making its way through Congress, aimed at defining which digital assets are securities and which are commodities. This clarity is desperately needed by the industry, as it would provide a more stable operating environment for companies and greater protection for investors. Globally, the picture is a mosaic of different approaches. The European Union has moved forward with its markets and crypto assets regulation, which provides a comprehensive legal framework for crypto asset service providers across the member states. This has been seen as a landmark piece of legislation, bringing regulatory certainty to a major economic bloc and potentially serving as a model for other nations. In contrast, some countries in Asia are taking a more cautious or even restrictive stance, while others, like Hong Kong, are actively positioning themselves as crypto-friendly hubs by approving spot Bitcoin ETFs and Ether ETFs, aiming to attract capital and innovation. One of the most significant recent developments has been the ongoing dialogue around stablecoins, which are digital currencies pegged to a stable asset like the US dollar. At the national level, El Salvador's bold experiment of making Bitcoin legal tender continues to be a fascinating case study. It's been used to promote financial inclusion, attracting tourism, driving tech investment, and reducing reliance on traditional remittance services that charge high fees. On the corporate front, adoption continues to broaden. Today, a growing number of mainstream businesses are integrating Bitcoin payment options. Luxury brands, travel agencies, often through third-party processors like BitPay or Strike. More importantly, publicly traded companies are adding Bitcoin to their balance sheets as a reserve asset. This trend was pioneered by MicroStrategy. It's signaling a shift in corporate treasury strategy, viewing Bitcoin as a long-term store of value. Perhaps the most impactful trend is grassroots adoption happening on Main Street. The proliferation of Bitcoin ATMs in cities worldwide has made it easier to buy and sell small amounts. The Lightning Network, a Layer 2 solution built on top of Bitcoin, is making small, everyday transactions faster and cheaper. It's enabling tipping content creators online paying for coffee or streaming money in real time. This grassroots movement is crucial for Bitcoin's long-term success as a medium of exchange. This expanding web of adoption creates a powerful feedback loop. As more individuals start using and holding Bitcoin and as more businesses hold and accept it, its network effect grows, making it more valuable and useful to everyone. To truly understand Bitcoin's current market dynamics in September 2025, we must look back at the most recent halving event which occurred in 2024. The Bitcoin halving is a pre-programmed event, happens approximately every 4 years, and it cuts the reward for mining new blocks in half. This means the rate at which new Bitcoin are created is reduced by 50%. This event is the core of Bitcoin's monetary policy, ensuring its supply is finite and predictable. The 2024 halving reduced the block reward from 6.25 Bitcoin to 3.125 Bitcoin. Show infographic. Historically, the period following a halving has been associated with significant bull markets. The logic is straightforward. Supply-demand. If the inflow of new supply is suddenly cut in half, while demand remains constant or increases, the price should, in theory, rise. The bull run of 2013, the bull run of 2017, the bull run of 2021, typically with a lag of several months before the full price impact was realized. We are currently in that critical post-halving window where the market is absorbing the effects of this reduced supply. The consolidation we see around the $92,500 level could be interpreted as the market building a base before this supply shock fully ripples through. In summary, the Bitcoin landscape on September 4, 2025 is a complex but fascinating picture. If this breakdown helped, subscribe to our community. Get ongoing insights, analysis, and your free copy of the 5 pillars of crypto investing. I highly recommend our deep dive. What is an NFT? A beginner's guide to digital ownership.